Well, ladies and gentlemen, this is Greg Mikulowski with a look at the euro versus US dollar for FX Street. I am from FXDD. Taking a look at the daily chart here from a technical basis, we must understand that today is a holiday trading in New York, Memorial Day here in New York, also UK holiday, which has the market trade rather quietly here. But from a technical basis, we still have our charts, and our charts will tell us clues as far as the market goes, and hopefully give us a little bit of support and resistance levels, not just for today, but going down the road. So if you take a look at the euro versus US dollar on a daily chart, this trend line here is one of my key trend lines that I've had in here, and going back to November of last year and connecting to the February lows here, we did have in this instance in early May where the market moved below that trend line, but it quickly rejected. That caused the correction in May, and then we had the sharp fall again, which took the price down to where it says is 51% retracement level at 121.31 level. What is the significance of that? Well, I'm going to have to go to the monthly chart actually, and if I go to the monthly chart and disregard this line here, but if you go and you look at the low for the euro, in of course over its history came in October of 2000, and that low came in at 82.25. If you look at the high for the euro over its history, that high came in in 2008 at 160.37. The 50% level of that move from the low to the high comes in at 121.31. Let's go back to our daily chart and move all the way down to the low. The low that we reached a couple weeks ago came in at 121.43. The low that we reached last week came in at 121.53. So the market is definitely having some support, some buying interest down at this 50% retracement level. Why? Because the risk is low. If you buy against the 31 level and the price goes below the 31 level, you sell. If the price is able to rebound, then you get this move up that took the market all the way up on Friday to a high of 124.51. So quite a nice move, even though it seems insignificant from this low to this high in relation to this whole move to the downside. From a trader's perspective, nice trade. But now the market is now back below this trend line, and this trend line currently comes in at the 123.45-ish type area. So as long as the price can remain below that level, the bias is going to remain to the downside. Perhaps we go back down and move toward that 121.31 level and another test of that. Now let's take a look at the hourly chart, see if this is giving us any clues from a technical perspective. And you can look here, we have this 100-hour moving average forming a little saucer bottom here, if you will, over the last 10 or so hours. The market has tested that 100-hour moving average with only one close really below that level. That occurred during this hour of trading here. The market closed below that level. Next hour, the market started to move higher, closed above it, closed above it, closed above it, closed above it, closed above it. Now we're back down, testing that 100-hour moving average, currently coming at 122.94, and that's where the current price is right now. If the market should close below that 92.94 level, we should see further selling pressure in the euro versus U.S. dollar as it fails to hold this support level. But we're going to have to also get below the low here that occurred during the London session. That low came in at 122.82 level. So get below the 94 level, close on an hourly basis below that level, get below the 82 level would be the next target to the downside, and then we should see further pressure in the euro versus US dollar. It's a progression steps, but the first move is move below the 94 level. That turns a bias to the negative side. Market participants should look to sell, and if the market should continue below the 82 level, we should see further selling pressure in that currency pair. Where's your stop if you should sell at this below the 94 level? And I'm going to have to go to the 5-minute chart here and take a look at the 100 and the 200 bar moving average on the 5-minute chart. The 100 bar moving average comes in at 123.03. The 200 comes at 123.04. If the market should be move below the 94 level, we should stay below these two moving averages levels. If the market is not able to stay below these levels, this becomes a stop, and the market should move higher above here. That would be a successful test of the 94 level, move back above the 05 level. So right now the market has a choice. It is a choice whether to buy against the 94 level or look for a sell through the 94 level, look through a sell through the 82 level to move to the downside. Alternatively, if you're buying against 94, look for a move above the 123.04, 05 type area area, and that should confirm further moves to the upside. So key level as we speak in the dollar, in the euro versus US dollar. We'll be watching that level very closely going forward, and not only today but into the Tokyo session, into the evening session, and perhaps even into tomorrow. These key levels should continue to hold up as key support and resistance levels for the euro versus US dollar. This is Greg Michaelowski on behalf of FXDD with a Forex look at the euro versus US dollar for FX Street.